Hello and welcome to the Counterpoint podcast. Today we're going to be talking about the situation in the semiconductor world, and I'm joined by our research director, Dale Guy. Hello, Dale. How are you today?
Hey, Peter, how are you? I'm doing fine. Thank you.
Great. So Dale has joined Counterpoint fairly recently, coming from a career in equity research with some of the biggest banks in the world, and is leading our charge looking at the overall kind of semiconductor market with a special focus on the foundries. And they are very much in the frame at the moment as we're kind of coming out of this. Well, I guess some of us are still in the pandemic. We're still in the lockdown here in the UK. I think Taiwan has been has managed the situation much better. But it's interesting actually, Dale, because it's I guess it's just about a year since because Chinese New Year 2020 was when the pandemic really kind of made headlines around the world. And that was when we saw, a big kind of crash in demand in China at the same time as a lot of people were kind of going home from the factories. So that impacted the supply chain then.
Right.
What we've seen since then is a kind of a strong bounce back in demand at different rates across the world. And as people have been working much more from home and using smart devices more to entertain themselves, we've seen this kind of increase in demand, right? So there's been this difficulty for the overall semiconductor and finished goods supply chain to kind of manage that drop in demand and then return of demand. And I think where this really kind of hit the headlines is in the automobile sector. So you know sales of cars fell off a cliff back when the pandemic first hit, but then they kind of bounced back. But I guess the auto industry is a bit slower moving than maybe smartphones. So they forecast the recovery badly, and now they're being hit. Is that how you see it?
Yeah, thanks, Peter. I think that this year definitely is also challenging to the supply chain because I think last year all the supply chain question is where's the demand, and this year the question becomes to where's the supply, because we do find a supply shortage, particularly in the semiconductor industry, and recently hitting the automotive sector more. I think there are two special reasons. First of all, if you look at the recovery of the demand from last year, auto was the last one. I remember when in July to August, we start to see the demand from PCs, smart homes, even people talk about new game consoles, people talk about iPhones. We start to see the demand come up. But auto, we didn't hear the demand pick up until fourth quarter. So if you know this industry where most of the foundry or the wafer plant are pretty much 6 months, even longer planned in the pipeline. So when the demand comes up in auto chips for foundry guys, they already fully book. So they fully book in Q1, Q2, maybe into the second half. So right now we see the big demand and supply imbalance in the auto industry. And secondly, I think in the past few years, most of the auto guys, they didn't increase too much capacity. They actually outsource more to foundry. And most of the company were IDM, such as NXP, such as Renesas, but increasingly they had outsourced more to foundry. So they rely on foundry more, but now foundry capacity fully booked. So even if they want to turn back to their in-house production, it takes time. So I think in addition to this work from home demand, in addition to the 5G or the high performing computer we talk, but two reasons which particularly addressing these issues, which are unexpected until very end of year.
Thanks, Dale. And I think it's interesting to look at the way that the auto industry is structured because, as you mentioned, there are some of the chip suppliers like NXP and so on. They tend to supply to the tier one suppliers that then supply to the final auto manufacturers, right? So there's this slightly more complex chain of intermediaries through the auto supply chain. which I think maybe adds a bit of complexity. Um, Plus, I guess there's another transition which has been going on in the smartphone space. So you talked about iPhones. Apple launched the 5G iPhones in October, and then further models into November. So they also saw a kind of a big ramp in demand and obviously supply for that. And those iPhones, or the chips for those iPhones, and then what Apple did with its new MacBook Air on the M1 chip. So they've been kind of migrating to these very advanced nodes within the 5 nanometer and so on. But I think that the auto industry is still on some of the more mature nodes, right?
Yeah, they are either in the 8-inch fab or some mature nodes in 12-inch, and particularly on 8-inch. If you look at the from the chip maker perspective, the incentive, for example, for foundry guys, the incentive to adding capacity is pretty low because the ROI, return of investment on 8-inch fab, is not as high as the investment in the advanced chips. So if you look at the demand supply, if in the mature nodes, the global supply annually roughly about low single digits every year. So 1 to 3%. If we add it together, the wafer supply of mature nodes only low single digit, but demand before this COVID-19, the demand relatively stable. So people are looking at low single digit growth in both demand supply, which matches. But now the demand have picked up. So the demand would be, if demand is 5%, 7%, that created the big shortage because it's too late for the foundry, the chip makers to increase capacity at this point. Even they need time to order equipment. So the whole supply chain, the issue is the underestimate of the mature nodes products and underinvestment of the foundry fabs in the past few years.
Yeah, and I think you touch on a really interesting point here, which is the lead times involved. I guess not just in terms of if I increase my capex on new equipment for the foundry, there's a long lead time for that. But there's also a long lead time from placing an order for new chips to actually getting those through the foundry, having them packaged, tested, and put into the supply chain. So, can you talk a little bit about what some of those lead times are?
There are a couple of lead time. First of all, in advanced node, the lead time of foundry production could be 12 to 14 weeks, even could be a little bit longer. And in the mature nodes, it's maybe about 10 to 12 weeks. So in the foundry side is the major bottleneck. That's why chip makers, they have to place the super hot order placement in a foundry because there's no luxury for them to wait for 10 to 12 weeks. They have to get the confirmation of the wafer supply as soon as possible. And beyond that, I think in the industry wise, we also see the bottleneck from the packaging. Packaging has been a very, very mature industry as well. But now packaging, similar story. Their capacity have been fully booked by other application. Packaging usually take about a few weeks. And if we talk about a module, the downstream, it may be 1 to 2 weeks. But if we're adding together this lead time from chip manufacturing to the end product supplying to the automotive module makers, it's about 3 months, 4 months. So that's why, in our view, I don't think the auto supply shortage could be resolved soon. Most likely, we will see a better situation in late of second half this year. Because even if you place order now, you have to wait for the chips and all the packaging finish by sometimes after summer. And you have to, and this is just maybe the part of the small portion of the of your order. So we saw the situation actually is quite challenging for the supply chain.
So the auto sector could be in a lot of pain for at least the first half of this year. And I guess what you're saying is, possibly even almost throughout the year, right? So that's going to be tough.
That's exactly pretty tough. That's why I saw the news that some automaker already cut their car shipment forecast because they realize it's not likely to solve the problem soon. They'll have to back to reality. This year they have the lower shipment of the cars in light of the chip shortage.
Now we're just coming out of the fourth quarter earnings season, and quite a few of the chip makers have actually reported really strong revenues, upsiding, by huge margins in some cases. Um, so what's going on there? So is it a kind of a combination of things like the shift to 5G in the smartphone space, coupled with the fact that maybe many some of these companies built up some inventory during the first part of the pandemic and are now been working down that inventory, so they've managed to sort of multiply their sales a bit, or is what else is going on?
Right. Thank you, Peter. I think if you look at the industry, semiconductor industry, if we talk about logic semiconductor only, in other words, excluding the memory chips, the logic industry this year, we're looking for about 10% of the YOY year-over-year growth. Last year was single digit. So we do see the acceleration of sales growth. There are a couple of reasons behind 5G applications, work from home demand, also the high performance computing, which related to data center, all these digital platforms. But one of the reasons which we haven't found in the past few years is about the wafer price increase, appreciation, because in industry, the pattern was decline gradually for the similar products. So you probably start from wafer, say $5,000 US dollar for the wafer, and you gradually decline 5%, 7% every quarter or a few quarters. But we saw this wafer price stop to decline from second half, and for mature nodes, they even increased the price. So in addition to the wafer shipment growth, this cycle particularly we also finding this wafer price increase. So higher selling price, higher shipment, that makes the sales growth accelerated.
Okay. We've talked a bit about Apple kind of transitioning to 5G iPhones, and those are built using their own chipset with 5 nanometer as the process node. And we've also kind of mentioned the fact that Apple is shifting on its computing platform, so it's Macs, away from Intel-based chips. Now that it's talking about that transition taking, I guess, a couple of years to move all of its computing platforms away from Intel. But what does that mean for the broader industry? Because I guess Intel has been one of the big chip makers, and has some well discussed challenges that it's facing itself. But if a fairly sizable player like Apple is moving essentially to ARM-based chips away from Intel, they're using TSMC as their fab, right? For Apple is. So what does that mean in terms of the overall kind of capacity for other players? Are we expecting other computing manufacturers to shift also to an ARM-based platforms?
Yeah, sure. Yeah, Peter, actually, this is quite a lot of question around there. But, in addition to Apple, even though Qualcomm, they also restart to working on their chips, targeting PCs. MediaTek, they officially talk about this year, their Chromebooks were using MediaTek chips more. So in other words, if you look at the client PC industry, which mentioned to about the consumer or low-end commercial notebook industry. If you look at these sectors, Apple is a game changer from long-term perspective because in this industry, Intel and AMD, primarily Intel, dominant space. But if you look at lots of the feedback where actually we internally, we also try to play this M1 chips in the new Macs and finding it's running pretty smoothly. So we think more and more consumers will think about not just using Intel, but also ARM-based PCs that offers good not good performance and plus the good form factors such as power savings, such as running other major some softwares. So I think across the board, ARM-based PC today remains small part of the total PC shipment, but we do see Apple, Qualcomm, MediaTek, maybe others come to this area, and that's the big one of the biggest challenging to Intel. Since the other discussion point should be Intel delay its leading edge technology, they lose shares to AMD. But in our view, the more important challenge to Intel on notebook side is the threat from ARM base. I think Apple make a very good example, and people are waiting for even better M chips using more advanced nodes from TSMC into next year. We do see the penetration of onboard PCs would be is likely to accelerate it from this year.
Hmm. And I mean, will the foundries have capacity to be able to support this transition if it comes fast?
There's definitely challenging to the to TSMC and its major customers. But in our view, if we talk about leading edge, say 7 nanometer, 5 nanometer, TSMC and even Samsung Foundry, they had a very long-term plan of adding the equipment such as EUV. So they booked EUV already. ASML will ship EUV, have a big backlog, but they will gradually ship the EUV, and the capacity build so far, in our view, should meet the demand, not only in the ARM-based PC, the CPUs, but also 5G smartphones. So in our view, 7 nanometer, 5 nanometer, these technology capacity should be well built for current demand. But again, the upside risk would be the unexpected strong demand from Apple, for example, from the MacBook using M1 chips. TSMC has to add capacity. So there's still an upside risk. However, compared to the mature nodes where no one want to add capacity so far, I think TSMC, if you look at the capex, capital investment this year, 25 to 28 billion US dollar. That's a record high, double from 3 years ago. And the story behind is the major customer increasing their order outlook from PCs, from servers, and from 5G smartphones.
Yeah, and I think you've covered a lot of that. The way that capex is going to impact the industry in a couple of blogs that you've written recently, which any listener can check at counterpointresearch.com and read Dale's blogs there. Just before we kind of wrap up, that obviously we've been going through this trade war between the US and China, and that has impacted a number of players, particularly Huawei, which was one of TSMC's kind of primary customers, and I think has supported TSMC through its HiSilicon chip brand with a lot of the developments of new process nodes. What do you see as the opportunities and challenges here, both for the the existing players, but also some of the new chip makers in China, such as SMIC? I mean, will they be able to fulfill some of the requirements of China-based companies, or is that are they a little bit behind in terms of technology?
Right. If you look at technology, even before the sanctions, where U.S. government banned the equipment, leading equipment in the U.S. to SMIC, SMIC technology is already behind TSMC or Samsung Foundry at least 2 to 3 generations, which means about 5 years plus. And from now on, we think SMIC they are changing their strategy to developing or expanding their growth from mature nodes because there's many demand, local demand, including the power management ICs, automotive chips, some CMOS sensors, some low-end memory chips. There are the demand there. So I think SMIC strategy is going to meet the demand from local customers. However, the challenging always that currently they don't for overseas customers. Everyone be cautious about SMIC. So that's why lots of the customers, such as Qualcomm, for example, they shift their business, the wafer orders from SMIC to Taiwanese foundries late last year because they don't want these issues to impact their power management ICs, which is a small chips, but it's very, very important to their business. So this is where we found the challenge on SMIC. If you look at their sales portfolio, China-based customer remains majority. However, we think in the short term, this situation would not be changed. In other words, they have to let down the China customers' business to grow. Otherwise, their high-end investment seems not likely to happen in any time soon.
All right. Dale, I think we've exhausted our time. So thank you very much for joining and joining late in your day. So many thanks.
No worry. Yeah, thank you, Peter. Thanks for all the questions. I think, in conclusion, people talk about a chip shortage would not be resolved soon. Even industry leaders think 2022 we might see the better situation. But the dynamics will be would be a certainty to some supply chain, automotive, and maybe other consumers. So we will see. But this is a good topic. Thank you for your time.
All right, great. Thanks, Dale. And if anyone's listening, if you want to reach out to us to talk more about this, please do uh, find your Counterpoint representative. You can reach out to info@counterpointresearch.com. Otherwise, it's just for me to say thanks for listening and tune in to the next Counterpoint podcast. Many thanks. Bye now.